Welcome, welcome, welcome back, people. Today is another blessed, beautiful day, and I have some beautiful additions and points that I want to add on to what we have already been learning to elevate your mental and to give you more accurate decisions on entering and exiting, right? In the last episode, we covered some tools, some indicators that you can utilize to get yourself in and out of some trades, right? So now what I want to be able to do is to add on to those things so that you can use even more indicators, more tools that can give you even more yeses, ladies and gentlemen. So let's just dive and jump right into this thing and let's just make it happen. Open your Fidelity Active Trader Pro and I want you to open up Apple. We're gonna mess with Apple today. It's a good fruit, right? I wanna break down some things and show it to you. So let's just get into it. Let's just go. So we have Apple here, right? Ladies and gentlemen, you should already know by now how to handle those things and how to set your EMAs in place. You should already have them saved here. If you don't remember, you can save them there. So right now we have our EMA period of 20, 10, 30. We have our SAR. You can see that there. So my EMA that's on a period of 20 is blue. The 10 is pink, fuchsia, whatever you want to call it. And I have an orange for the 30. I want to show you some things that are very, very great of an observation. Here, as you can see right now, I'm on a frequency at the bottom here of a minute, right? Now, what I would like to show you here is a very, very beautiful pointer. Let me add into this one first. Before we get into the most beautiful thing that you're gonna love, I want to show you this indicator. We're gonna go here to indicators, right? Everyone go to draw. Now there are many tools, the drag scroll erasers, trend lines. We went over some of these already, right? The support resistance line that you can put in there, horizontal line, vertical line. Fibonacci time zone, we didn't go over that. Fibonacci retracement, we didn't go over that. We didn't go over some of these here, but I would like to go through the Fibonacci retracement line with you. And the reason being is because you know the term retracement. We went over what a retracement is, and I want to show you how we utilize that into our active trader. So go ahead, click onto it. And I'd like you to come over here to what we're going to do is that we're going to draw a line from the first retracement that we see here, right? Now, remember, we're going to go from the top to the bottom and to the lowest point here that we see the first retracement, which we can definitely notice that because the SAR in itself is also letting us know that it's coming down here and it's coming up, right? So we have these lines, and if you notice they're purple, we went from the opening of the high and the low. Now, you don't have to do this at the beginning. You can do this retracement at any drastic point of the day with the price action, whether it's going up or whether it's going down. Luckily, at the moment, our first drastic time frame is in the morning, which most of the time it probably will be because most of it's very volatile within the first half an hour, first hour of the day trading. So what I want you to notice here, right, is that we have different areas. You'll notice between these lines, there are areas, and something. What is this telling us? This can tell us many different things, right? But what I want you to notice is that we can look at this region and consider this a very low region. It seems that everything below that is just falling completely off, and to go up, these lines, we have to find these specific regions. And how do we break these lines, right? Let's use a multiple of our indicators to allow us to solve these things, right? What I'd like you to notice is that this would be a specific region here that we would like to, at the moment, we would like to say, hey, you know what? Maybe because it's so low, we may want to buy into this region, right? Because we noticed that the underline dropped here drastically here, and this is where the SAR made the change of it. And once we formed that support there, the underline went up for an upward momentum, right? Now we should be able to make a decision that, hey, you know what, as we added in our Fibonacci retracement, that we should be able to, we want to make a decision to wait to purchase this underline within this specific low area here. Now, if we're blessed enough to get it down here, then we're in a good game. But before we even knew that it was going to get here, you have to be alert of what's going on, because all of this action happens before this occurs. So I would like for you to notice this specific point here, that we know that once this action crosses this line here, then it just completely falls off of the grid, right? Also, now we can look here. I would like to just zoom in and show you something here, that I'm gonna zoom in here, right, just for this part of the action. We notice that something is happening here with our EMAs, right? As they get, the closer they get towards each other, the momentum itself actually changes direction along with it crossing the candlestick, right, completely. We notice that the closer that it gets below or above a specific action, it's going into that direction. And that may be a signal for a good timing to get into something. Whether we wanted to jump in here because we noticed that the EMAs got so close together that in a sense it's giving us a single signal to say that it's a strong possibility that it will go up, right? So we can also allocate that to say, I'm going to zoom out here. We can also allocate that to say that this specific region that we noticed that the stop was in, is that it is a good region to actually buy in, right? Now, the major part now is, when do we get out, right? Which is the part that everyone wants to know. So here we will be able to get in a simple alert. Let's just break it down on this small region here. I want to show you how to be able to grab every bit of penny that you possibly can, right? And what we notice here is that as the EMAs are underneath the candlesticks and it goes up, right? We see that this is a strong support here. But our next candlestick here shows us that it literally starts to decline as it comes down. Now, not within too far, because remember, we're still in the 1 minute frequency. We would notice that this parabolic SAR comes in here. That's our first alert. Well, we can say our second alert, because the bearish action of this candlestick shows us that, yeah, we were in an uptrend, but if you notice right here, this action of the candlestick is below the exit point of the upward bullish action of that candlestick. So it's showing us here that, oh, it opened below what it closed at on a high. Next, we have the parabolic SAR coming into play, another clue indicating us that this thing is going to go down, right? So let me just zoom out here. I want to show you something even more beautiful to add on to that, right? So we had the chance to be able to get in right there and get out, or you can get in and hold. Now, this is where your strength in mind and confidence has to be able to play, has to be able to give you that strong gut to hold in, right? Because we know that this region here is a good time to buy in. If we're able to buy in here, that's even greater. But what would allow us to know if it would get into here? Now, if we pay attention here, once the parabolic star came into play, it drastically pushes its way down. So we know completely here that it's going on a downtrend. And to add on to that downtrend direction, I'm just going to zoom in. You notice what did I say? I said that how the closer that these EMAs, all three of them, because remember we're using all three at the same time, to come in and crosses over on the bearish action of a candlestick, and it literally gets so tight in there that it can cross over a very small candlestick. That gives us an indication that this thing is a definite. If the spread of the EMAs go from this far to come this close to go and cross through any specific candlestick, know that it's going in that specific direction strongly, right? And to add on to it, we have the parabolic SARS coming into play. And what's even more beautiful, remember we spoke about the spacing of the EMAs. So now we can get even more confidence to know that this thing is actually spaced out to let us know that that direction is still going to happen, even though we notice here that we have another direction coming in from the parabolic SAR. But what is so beautiful? What would show us to let us know that this thing is still going to go down, right? Because yes, here we have a very bullish candle, but we notice that the EMAs did not close together and come strongly to make it a definite. In fact, it came closer here in this region here to cross through more of a bearish candlestick, which shows us and lets us know that we're still in a downward trend. And it also gives us another indicator here with the parabolic SAR. Now, if you look even closer as I come down here to my RSI, you would notice that this line crosses over at the bottom, right? Your orange line also in the ADX crosses the green here. So we have multiple signals that's allowing us to see this thing in a constant downward trend. And I'm going to zoom out here. As I zoom out, I want you to notice that we're here in this region, right? So our goal, we would love to buy within this region. So we would look for these different signals to give us more of a confidence, more of a detail to know, hey, this is when to get in and this is when to get out. So what makes this specific spot even more beautiful? Let's zoom in even more detail to be able to allow you to see the switch of direction with the... I'm going to zoom in here. Sorry for stop talking. I just want to zoom in here and just show you this here. Notice this here. Before it goes in that upward trend, right? Remember, I told you the EMAs, they get closer and tighter. So now look how tight these lines got. And in fact, they cross over each other. Be aware of it crossing over each other. That sends it in an upward direction, right? It starts to spread out here, and it shows us that, hey, it may be some comfortability of an upward trend. We should not get too scared when we see a bearish action of a candlestick with a spread out, in a sense, spread it out EMA that only one specific EMA went through. Again, follow my cursor here. Look. The EMAs get so tight that crosses through this bullish candlestick, so tight that it looked like one line. It's continuous in an upward direction. These are signals that we want to look for, that we want to make sure and use those as the price action is happening, as we see it, the candlesticks loading. We want to find those things to keep us calm, to know for sure that this is when to get in, this is when to get out. I'm seeing multiple signals, multiple indicators that's telling me yes, 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 and no, no, no. And that would give you the confidence to know that, hey, I'm not losing money for a long run. This is just a quick dip, and I'm comfortable to stay there for it to actually come back up and make more of a profit in the long run. And those things are what separates the winners from the losers, and we're here to be winners, right? Some other beautiful things that I wanted to touch on here, which will allow us to know, is it a definite time to exit, and or is it a definite time for us to get into the specific underlying? And what we can utilize with that is the frequency tool here. As you can see here, we're on the frequency of a minute, right? Now, we have the option of to go to 3 minutes. We can apply that, and you can see that it zooms in a bit, and we can go into 5 minutes. Now, I wouldn't recommend for you to dive into any further time period frequencies such as like 10, 20, or daily if you're seeking to trade within the day, right? Now, there is a bit of difference when it comes to the minute versus 3 minutes and 5 minutes. When you're in a frequency of a minute, this gives you a sense of a bit of anxiousness because there's a lot of action happening within that minute. To give you more of a more of an easier head and relaxation, you want to check into 3 minutes, and even more stronger of a time period of frequency, you want to check into 5 minutes, right? I balance between 3 minutes and 5 minutes, but in all, you have to pardon, we have some remodeling going on, right? So in all, what I want you to be aware of, right, is that when you're making a decision here, let's start from 1 minute, right? Let's use a perfect example here. When you're making a decision to say, should I enter or should I exit at a specific time, let's go into this time period here on a minute, right? We want to zoom in here. We would notice that on a minute here, it comes together and it crosses in, right? And it goes under. We also want to look at 3 minutes, and we can zoom into that same time period here. And you notice that the lines get a bit wider there based on the time frequency, right? But it still comes together. The EMAs aren't as wide or tight as it is in a 1 minute frequency, but it gets a lot closer, and the same goes for 5 minutes. Let's just go back, step out, let's go here. You see that it's still wide here, but it gets a lot closer within this frequency here, right? So before I make any specific trade to exit or to enter, what I would do is that I would notice the action to say that, let's just say if we're at this time period and we're going up, I would bounce between 1 minute, 3 minutes, and 5 minutes to know, am I at a definite point that I should exit? So let's zoom in here at this point to show you exactly my point, what I'm making here. So on 1 minute, we notice that the lines come together and it crosses over a bearish candlestick here within 1 minute. So automatically on 1 minute, I may know to completely get out on 1 minute. It's very fast. It's initial action. But what if it isn't exactly gonna go all the way down? How would I know that? Because what I have to also look at my 3 minute frequency. Click here with my 3 minute frequency. to show me that it also does the same thing within the 3-minute frequency here to cross over. And if it does the same in the 5-minute frequency, I know for definite here, see? I know for a definite here that all three came close and went through that bearish candlestick, that thing is going down. So not only am I using all of these indicators, I'm also bouncing between the frequencies to make sure that the action that's happening is the correct one for me to enter or to exit, right? Because 1 minute, as I said, is more of a drastic action because there's so much activity that happens each minute. Sometimes within a minute, within 5 minutes using a 5-minute, within 5 minutes using a minute frequency, we can have price action going up and down. Now, if we look in the 5-minute frequency, that action, instead of going up and down, may just be a constant action of going up or just a constant action of going down. So we want to be able to give ourselves that space, that relaxation to make a decision with all of our indicators and all of the tools that we put in place and bounce through with the frequency and make the best decision at the right time to know, hey, add those things, compound those things with the SAR, the EMA, all of these different tools, and you will be right on point to know, hey, let's get in. This isn't a reversal. This is a quick retracement, a quick little dip, because in the 5-minute frequency, it's not showing me that it came close, that it's cutting through any candlestick to make me feel that I need to get out, or the SARs aren't in place, it didn't cross over the ADX, or it's still in the specific region in the RSI. Combine all of those things, you would become a master of this. Next episode, we're going to be able to add on things that can automatically get you so you can have yourself set where you can look at these price regions as we see to the right, using the Fibonacci retracement lines, that you can set yourself specific price points to get out. And this is called a stop and sell loss. We're going to get into that in the next episode. Don't want to drown you with too much, but I want you to be able to take what I just gave you here, these tools, these specific things, and enhance what you already know. And let's just keep winning. Thank you again. Don't forget, you're always more than welcome to purchase merch. I love it. Right now we support Black Lives Matter, and check it out, man. Let's have fun. Also, if you would like to be able to my watch list to see the stocks that I watch on a daily basis, that I invest in on a daily basis, sign up for it. Get yourself the right targets that you want to hit. Great price range, affordable, and achievable. Focus on that. Get yourself the right targets. Let's go, man. It's winning season.